All right, welcome into Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy. Thank you very much for joining us in on this Friday. Boy, what a tumultuous week it's been. In all of the things we talk about, there's three things that we can trade in this world. One of them is going to be commodities, the other one's going to be interest rates, and the last one's going to be equities. And then there's a multitude of things you can trade off of those three, but those three silos are all we've got. And all three of them this week have been going off the wall. So let's take a look and see what we've done in the overnights so far this week in corn, right? That'll be the first one I bring up. We're up here today. So look at this. Overnight we settled at $4.02. We got below it, obviously, yesterday. So this is a key level. We'll see how long we hang around that level. We did spur on a little bit of demand because it's gotten so cheap. But right now, 383 in SEP down, that's up a penny. Dees is up a penny and 3/4 to $4.25. So there you go. That's corn. How about soybeans? I think that they came back from the precipice yesterday or this morning. They're up 9 1/4 cents in SEP to 10.18 1/4, but still about 5 cents off the highs. No, the new crop up 8.5 cents to 10.25. That's a nice round number. We're 5 3/4 cents off the high there. Wheat in Chicago. Can you tell I've had a lot of coffee? Yeah, I have. SEP's up a 1/4 cent, one tick to 5.32 1/4. And that's about what, 3 3/4 cents off the high of the day, 4 cents off the low. So right smack dab in the middle of the range. If you go out to March wheat in Chicago, that's up 3/4 cent to 5.79, and that's still about 3 1/4 cents off the high of the day. So we've got about a steady, little bit better board. As you go out the deferreds, we lose a little bit of real estate, but that's what we've got going on so far in wheat. That's Chicago wheat. Let's go to the Kansas City wheat. That's the hard red. And this one's a smorgasbord. Little something for everybody, right? 3/4 cent better in SEP, 5.55 1/4 is last there. That's a penny and 3/4 off the high of the day, but we've only had about a 6.5 cent range. Dees is sharply unchanged, 5.70 3/4. And the next month, March, it's down a penny and a half. So whatever you want to look at there, you can take away. But 5.83 3/4 is last in March, hard red wheat, Kansas City. Spring wheat, Minneapolis, that's going to be what? Steady a little bit better, a couple cents added onto it there. 2 1/4 cents better in the SEP to 5.90 3/4. And that's about what, 1 3/4 cents off the high of the day there. You go out to the March, that's up 2 3/4 cents there to 6.28 1/2. That's a penny off the high. So that's not bad. That's spring wheat. We like that. And then finally, let's go to the cotton board. We want to put a 70 on this Dees. We can't quite do it, though. We're 40 points better there to 68.48. Not too far from the highs by about, I'm going to say 14 points. But that's what we've got going on. Steady a little bit better there. So pretty quiet across the board. Let's bring in our next guest analyst, and that's going to be, we're kicking the weekend off with Brian Hoops, Midwest Market Solutions. Brian, thanks for coming on. It's been a pretty tumultuous week. What say you? I'll just let you have the floor.
Well, good morning, Scott. So, it's pretty rare that we open and close the exact same as the end of the day and the beginning of the day. Just don't match up usually. And today could be one of those days where we open, higher here in corn and soybeans, but close the day lower. It could be opposite in the wheat, where we're down in the overnight and we end up trading higher. The U.S. dollar is in pretty much a free fall this morning after that jobless numbers came out. It was well below expectations, 114,000, the smallest jobs growth since December of 2020. So stock market is reeling. U.S. dollar is sharply lower here. And when we get a lower dollar, a lot of times you'll see some buying, especially in the wheat market, giving us some strength there. Now, we also had a private export sale announcement this morning. Yesterday, we had sale of soybeans to China. This morning, it was 202,000 metric tons of beans to China. And it's been rumored for a couple days where China was going to step in and do some more buying of U.S. U.S. products, mostly soybeans, and we've seen that. So it may be kind of a buy the rumor, sell the facts sort of a trade where we were higher overnight in soybeans, and we start to give some of that back going into the weekend. I checked some of the forecasts, up in like northwest Iowa areas. By next week, the highs really don't even get into the 80s by next Wednesday, Thursday, Friday. So temperatures expected to really cool down, and you bring some rain chances along with it. It's just nearly an ideal forecast for reproduction of corn and soybeans as they finish out this crop year.
I mean, one thing I hadn't asked anybody in the last 3 or 4 days is how have the overnight temperatures been? I mean, some folks like to talk about that. What has it been cooling off enough that everything's okay, or we had some hot spots?
Yeah, I mean, it has. In fact, they brought some rain chances overnight that was really unexpected, or rain showers that were unexpected. Some of those areas in northwest Iowa, like Sioux City, the other night had 2 inches, and go across that northern tier, 2 to 5 inches was pretty common overnight rain showers. So things really cooled off. But when you have that heat and humidity, instability in the air, that's when you have those surprise showers, and sometimes that happens in the overnight, and you just really don't have that adverse effects. July was like one of the cooler Julys we've had on record, which should mean very good pod filling for soybeans, reproduction for corn. When they reproduce that ear, it looks like we're going to have high yield potential. FC Stone survey was out yesterday and confirms that they're looking for increases in both corn and soybean yields compared to what the USDA is saying right now.
All right, I'm hearing that too. All right, stay right there. We got to go away. We're going to come back and remind ourselves how we did when the hogs and the cattle yesterday. We'll be right back with Brian Hoops right after this. All right, welcome back to Market Day Report. This is where we talk about the live cattle and the hogs and everything else. Let's take a look and see, what did we do yesterday? Remind ourselves how things, and it was an ugly one. We had the big sell-off in the equities yesterday. I think we had one eye on the equities when we were talking about cattle yesterday. So let's go right to the October. That's settled lower by $2.95. 183.72 was the settle there. Look at the Dees. That was off by $3.27 to 184.60. So rough day in live cattle. It got a little rougher too as we took a look at the feeders. September closed down $5.30 to 251.80, and October that closed down $5.27 to 250.87. So that might continue today with what we've seen happen in the equities after the non-farm jobs number we just got. But here's where we had some strength. October hogs up $1.10 to 77.02. Let's bring back in Mr. Brian Hoops. Brian, we've got 1 minute to hear everything you know about the livestock market.
It won't take that long, Scott, trust me.
Have at it, brother.
Cash cattle trade yesterday, a disappointment, about $2 softer in the Southern Plains at 188. When that news hit, that's when the futures started to sell off, and it probably won't be a very strong opening this morning or a very good trade for the cattle. Likely to have some follow-through selling, probably a 25 to 30 point lower opening. And you look at what's happening in the equity markets this morning, big sell-off in the S&P futures, weakening economy. It goes back to the fears that we've been talking about. Is this economy weakens, will the consumer continue to spend on beef and beef products? They're buying the ground beef, 75%, maybe up to 80% levels. That's in high demand. But anything that is more expensive, it's harder and harder to move that product, and we're seeing it reflected in our box beef values. We even though we're cutting kills slightly, we're not able to prop up those boxes, and the packer margins are still deeply in the red.
Yeah, I mean, it's going to be interesting when you talked about the consumer there, and that really kind of fired something up in my brain, because a part of that report that we got this morning also showed a much greater job losses than we thought we were going to see. We were looking for an unemployment rate of 4.1%, and that came in at 4.3%. So we skipped over 4.2. So we're moving towards that 5% level. And so, I mean, it's going to be hard for consumers to keep up the spending if they don't have a job, is kind of what I'm getting at there. What do you think?
Yeah, you're absolutely right. And, it certainly argues that the Fed needs to step in and start cutting interest rates. They've said they're going to wait to do that for some time. We'll see if they do, in fact, do that. But yeah, it's going to be hard for these consumers. And a lot of the consumers that have jobs, it's more than one job. They're having 2 jobs to make ends meet. So it's going to be pretty hard for them to go out and get a 3rd job to try and help support their families because they're already stretched so thin.
You probably saw that meme about the government bragging about how great the jobs market is, and the woman behind the counter says, yeah, I've got 3 of them, and I still can't pay my rent. Anyway,
right.
That's exactly what it's like. All right, thanks for being on.
Thank
Brian
you.
Hoops coming to us from Springfield, Missouri. He's with
yeah, a lot of folks having to kind of spread themselves thin.
Yeah, I thought that was, so I'm not going to say I told you so, but remember I said that this economy was like a bunch of plates spinning on those little sticks. I don't know if you remember me saying that.
I do.
I think we had a few plates fall today.
Yeah, I was just going to say some are shattered on the ground.
Yes.
All right.